What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be reviewing TD stock. Before I start the video, I want to give a big thank you to all my viewers. You're probably just watching because of social distancing measures. Leave a like if you want this whole pandemic situation to be over, and consider subscribing if you want to make my day a bit brighter. With that out of the way, let's get right into the review of TD stock. TD is one of the big six banks here in Canada. In the States, there are tons of banks out there, but in Canada, we have about 6 main banks. The big 6 banks in Canada are TD, Royal Bank, Bank of Nova Scotia, CIBC, BMO, and National Bank. I don't really know why National Bank is part of this big 6. It's about 1/5 the size of TD. But I guess people use them. I don't really know anyone that uses them. I hardly see any of them here in Toronto, but they are headquartered in Montreal, so maybe there's more in Quebec. A little bit of history about TD Bank. They are the amalgamation of 3 different banks: the Bank of Toronto, Dominion Bank, and Canada Trust. By combining these 3 banks and having only about 5 main competitors in Canada, they effectively made the banking sector an oligopoly. This means that there's only so many of these companies, and it's very hard for other companies to compete with them. Other oligopolies include the airline industry or the telecom industry. Leave it in the comments below if you want me to review a telecom company. So why aren't there more competitors to the big 6 banks in Canada? Well, it costs a lot of money to become a regulated bank. There is one competitor that is up and coming in Canada. They're called Wealthsimple. I'll leave a link in the description below where I review some of their products. So why aren't there more competitors to the big 6 banks in Canada? Well, it costs a lot of money to become a regulated bank in Canada. This is by design so that not everyone can make a bank. I'll show you in a minute that almost every business person would want to become a bank if they were allowed to do so. And no, Tangerine and Simply are not competitors to the big 6 banks because Tangerine is owned by Scotiabank and Simply is owned by CIBC. Alright, so now let's get into the business model of banks. You'd be forgiven if you thought the main purpose of a bank was to keep your money safe. It's actually far from it. The main business model of a bank is to take all the money that you deposit from either checking or savings accounts and invest it and give it out as loans to businesses. They loan this money out at a much higher rate than your savings account makes, and so they make money on the difference. I stress the importance of investing for yourself on this channel, or at least investing in stocks over a savings account, because as you can see, in times of crisis, the interest rate for savings accounts has absolutely plummeted. It's pretty close to 0 right now. Another topic that I'll touch on is that the banks use what's called fractional reserve banking now. This means that for every $10 you deposit in the bank, they only have to keep $1 actually there. They are free to invest or loan out that other $9. And there's no restrictions as to how they can loan this out. So they can loan this out to someone else, they can deposit the money in the bank, and then they can loan that money out again, continuing the cycle. This creates a problem known as bank runs, where if everyone wanted to withdraw their money at the same time, the banks simply would not be able to handle it. This is the only risk that banks have. But really, if everyone is pulling their money out of banks, I think you'll have bigger problems to worry about than TD going bankrupt. Alright, so now we know the business model of banks, and we know that they're an oligopoly. Now let's look into the stock price. The current price of TD stock is $56.77. I'll mention this is on the Toronto side, but it also trades on the New York Stock Exchange. This is about 30% down from its all-time high of about $77.96. So while 30% is a big amount to fall, it's not nearly as much as how much other companies has fallen in this recent crisis. I still think the stock can go a bit lower. I do not think we're at the bottom yet. I'd be very surprised if the stock does not go any lower in the near to short term future. And if we look at the 5-year chart for TD, we can see that the stock price was around the same amount that it was today. This doesn't mean that you wouldn't have made any money in the 5 years. You still would have collected about a 5% dividend. Now it's not exactly 5% because it wasn't 5% 5 years ago, but you would have made a decent amount of money. A third point that I will touch on is that while airlines remain a strong candidate to be bailed out by the government, the banks are the #1 priority to be bailed out. The government would bail them out absolutely first. This happened in 2008 in the States and would definitely happen here in Canada. I'll add that I personally bank with TD, I use their platform and I like all the features that they have. I've also used CIBC and I highly recommend TD Bank over CIBC. The user interface is just a lot easier to use. I do recommend Wealthsimple, however, if you are just starting out because they don't charge a lot of the big fees that TD does. And to answer the question if I think Wealthsimple will ever just completely take out the big 6 banks in Canada, I don't think that they will be able to do that. If anything, they'll just put more pressure on these big banks to lower their fees. So in conclusion, TD is a great stock to watch because they are an oligopoly, they have a great business model that everybody uses, and then in the event that there is a bank run, the government will be likely to bail them out. For me personally, the stock just hasn't come down enough for me to buy it yet, but I will be watching it very closely within the next few weeks. Again, I am not a legal financial advisor. This is not legal financial advice. Please do your own financial research. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about TD stock. Leave a like if this video helped you at all and subscribe if you have not already. See you in the next video.